In this video, we take a look at short and leveraged exchange-traded products, or S&L ETPs. These enable investors to magnify the returns of their investment. However, upside and downside risk are heightened when investing in leveraged strategies. For example, if Tesla rises 5%, then a 2x Tesla ETP increases 10%, a 3x Tesla ETP 15%, whereas a 1x short would decrease 5%. The opposite occurs when Tesla falls. A 2x Tesla ETP would fall 10%, while a 1x short Tesla ETP would rise 5%. Daily compounding is crucial to understanding how S&L ETPs trade. The majority of S&L ETPs reset on a daily basis, which can amplify profits in a trending market or lead to underperformance in a volatile market. So in a trending market, if Tesla rises 10%, then a 3x Tesla ETP will rise 30%. However, if Tesla rises a further 10%, then the daily reset means a 3x Tesla ETP will rise 39 percentage points. This works in the opposite direction in a volatile market. If Tesla rises 10%, then 3x Tesla ETP will once again rise 30%. However, if Tesla then falls 10%, a 3x Tesla ETP will fall 39 percentage points. If we take the historical performance of Tesla in a trending market, you can see how S&L ETPs outperform potential investor expectations. Between 29th December and 8th January, when Tesla rose 32.1%, 3x Tesla ETP jumped 121%. However, this worked against S&L Tesla ETPs in early March, when Tesla rose 5.1% between the 4th and 18th of March. Due to the volatile market, 3x Tesla ETP only rose 2%. S&L ETPs are not a new concept. The first leveraged ETP was launched in 2006. Low volume and low assets under management do not equal low levels of liquidity. In fact, liquidity is primarily sourced from the underlying holdings. Leveraged ETPs do not use derivatives to offer leverage. While some S&L ETPs do, leveraged shares physically buy the underlying stocks and use a matching margin loan to offer leverage. Single stock S&L ETPs are a relatively new concept on the European market, which offer investors exposure to well-known stocks. The advantages of single ETPs are they trade like a stock, no margin account is required, they offer multi-currency trading, they have capped losses, they can trade during EU hours, and they are a cost-efficient way to trade popular names with leverage. Raj Sheth, sales director at Leveraged Shares, said, "The pandemic has brought about a fundamental shift in the modern investor seeking globally scalable firms. Arguably, the driving force in global markets recently, individual investors, seek the ability to trade the best firms with their local broker, without complexities of borders and regulations." As always, do remember to visit etfstream.com to stay up to date with news and events in the sector.